Hey everyone, welcome to this explainer. Okay, so today we are unpacking a pretty fascinating strategy from CPA Brian. And honestly, if you get a standard paycheck, this is explicitly for you. Right off the bat, the source material hits us with this super provocative question. Ever feel like a sitting duck for the IRS? It's a bold way to start, for sure, but it perfectly nails the author's main premise. Think about it for a second. You do all the heavy lifting, right? So why exactly does the source view the standard paycheck as such a massive structural vulnerability? Well, to get that, we need to objectively define this W-2 prison. According to the text, the W-2 is a financial state where the government explicitly takes their cut before you even see your money. Think about that mechanism. You do all the hard work, but the government effectively gets paid before a single dime actually lands in your checking account. Because of this structural reality, the source officially labels the W-2 paycheck as literally the most taxed asset in America. Moving on to Section 2, the billionaire tax gap. Let's see how this builds into the broader macroeconomic picture the author uses to explain this heavy burden on everyday employees. $39 trillion. To put that completely staggering number into perspective, if you spent $1 million every single day since the year zero, you honestly wouldn't even be close to hitting $39 trillion. It's just wild. The author points to this massive national debt to explain a core claim. The government absolutely relies on your payroll taxes just to keep the lights on. Because the debt is so unfathomably high, the system requires this constant, guaranteed, massive influx of cash. And the easiest, most reliable place to grab that cash? The automated, pre-extracted taxes from millions of W-2 sitting ducks. The sheer scale of this economic reality is the macro reason why the W-2 tax siphon operates as aggressively as it does. Now, before we go any further, I think it's absolutely vital to pause on this quote. We ignore the economic theater. Now, regardless of your personal political leanings, navigating the tax code isn't really about taking a side. It's about impartially understanding the math and the rules of the game exactly as they're written. So we're just looking at the mechanics neutrally here, simply reporting the source's stance on government spending and taxation so you can clearly understand the playing field. And the source brilliantly illustrates the core inequality of that playing field. The W-2 worker is essentially on this automated conveyor belt. Taxes are siphoned off the top before they can even blink, which actively subsidizes and funds this massive government system. Meanwhile, the ultra-wealthy, they use sophisticated yet entirely legal shields. Billionaires don't typically earn their wealth through a standard W-2 paycheck. Instead, they strategically route their wealth through offshore entities, holding companies, and trusts. It's like a giant puzzle. These structures allow them to control assets and claim massive depreciation and losses against their income, effectively knocking their tax liability down to near zero in some cases. It's literally a tale of two entirely different tax codes operating at the exact same time. The W-2 worker pays first, while the billionaire strategizes first. Which brings us to Section 3, the 1099 side conviction. So how exactly do we bridge that gap? Well, CPA Brian strongly recommends starting what he calls a side conviction business under the 1099 NEC tax status. And listen, this isn't just about making a few extra bucks on the weekends. It is a fundamental structural shift in how your income is classified by the IRS. A real game changer. By generating independent contractor income, you legally unlock the exact same categories of business deductions that the wealthy use. Suddenly, a portion of your home internet, your new laptop, business-related travel, maybe even parts of your cell phone bill, they become legitimate legal write-offs. You transition from being a fully taxed laborer to a business owner who gets to actually deduct expenses before the government calculates what you owe. The author argues this is the absolute key to stepping out of that sitting duck position and finally taking control of your taxable footprint. Alright, Section 4, breaking the tax siphon. But what if you aren't ready to launch a whole business tomorrow? That's totally fair. Let's transition over to the immediate, micro-level strategies the source recommends for those of us currently locked tightly into the W-2 system. If you're in the W-2 prison right now, you have to legally, nickel and dime the system to protect yourself. The CPA breaks down 3 highly practical, actionable steps for this. First up, fix your W-4. The author strongly warns against sneaky underpayment penalties. Basically, if you withhold too little, you get hit with fines. But if you withhold too much, you're just giving the government a massive interest-free loan all year. No thanks. You need your withholdings perfectly dialed in. Second, maximize health savings accounts, or HSAs. HSAs are incredibly powerful because they offer this rare triple tax advantage. Your contributions are tax deductible, the money grows tax-free, and you can withdraw it tax-free for medical expenses. Honestly, it is one of the best tax shelters available. And third, fully utilize your 401k pre-tax buckets. By funneling your money into these accounts, you actively shield your everyday income from your highest marginal tax brackets long before the government can siphon it away. Finally, let's look at Section 5, Building Your Fortress. Okay, so we've covered the macro problems, the business solutions, and the W-2 micro-strategies. Now let's focus on the ultimate goal of actually implementing all of this. The author leaves us with this incredibly motivating encouragement. Don't let the tax siphon stall your 100K wealth explosion. This core message is really all about momentum and the sheer power of compound interest. Every single dollar you legally shield from the IRS, whether that's through a 1099 side convicts or by maximizing that triple tax advantaged HSA, is a massive step towards your personal freedom. Because when you keep those dollars, you can invest them. And over 10, 20, or 30 years, those saved tax dollars compound exponentially into real, massive wealth. The source urges earners to just stay highly disciplined. By legally mitigating your tax burden, you are protecting your long-term wealth trajectory and keeping that money working for your own future, rather than just endlessly paying down that massive $39 trillion national debt. Which brings us to our final thought. The rules of the W-2 system are inherently complex, they're heavily automated, and yeah, they are structurally aggressive. But they are also completely public rules that are just sitting there to be learned, navigated, and ultimately legally leveraged to your advantage. CPA Brian leaves us with one really powerful, deeply personal challenge to chew on. Are you ready to own your math and start building your financial fortress? Well, that's it for today's Explainer. Keep learning, keep strategizing, and we will definitely see you next time.